Oh my gosh, the world's falling apart again.
When was it not falling apart?
Interest rates are climbing. Nobody's sure of what's happening. People are getting laid off, and yet the stock market is staying strong right now. But people are speculating that with our debt ceiling being removed again and inflation was going to spike again. And Kris, is the U.S. on the verge of financial collapse?
I feel like the U.S., everyone always thinks that it's on the verge of collapse. And, right now I think people are reading into all the bad news, right? The last 2 years have not been kind to us. Biden's administration has not been everything that I think he dreamed that it possibly could be. And right now there's a lot of hurt. And you've got 62% of Americans living check to check. We've got $32 trillion worth of debt, but 18 months of spend whatever you want because no one has to be accountable. And we're printing money, and then the Fed's getting ready to release this new digital currency. And I'm like, great, you're going to make printing all that easier. And we just had our credit rating downgraded, and that's because people are losing faith in our currency, and they're no longer backing their currencies by ours. Like in the digital currency world, most currencies are backed by Bitcoin. In the real world, most people's currencies are backed by the US dollar. And right now, we're dropping countries like flies because they're losing confidence in us. And so, do we ever act together? Absolutely not. And some things have to happen to fix that. And do I see it really happening? I don't know.
Okay, so I want to approach this topic from two different angles, right? There's two angles that always come up: business and real estate.
Yeah.
Real estate, interest rates are so high. Have you stopped buying?
No, I'm actually buying more real estate right now than ever before. But there is a difference between real estate investing and buying a primary residence. And the 6.5 million homes in this country that we're missing, those aren't for investors. Those are primary residences. That is the supply that we need to come up with to meet the demand for people wanting real estate. And yet that number continues to grow. It was as low as 3 million, 4 million, 5 million. Now it's at 6.5. And that's because people aren't transacting real estate, because with interest rates where they're at, their mortgages are almost double. So if people on average around the median are paying $1,000 more a month, and most people are living check to check, they can't afford that. So they're saying, well, I want a house. Turns out that my want may have been more of a luxury because I can't afford it, which means I didn't maybe need it.
But as an investor, those rates don't scare you.
No, it's interesting. There's all sorts of people out there that are confused on this game. And they're saying, well, if rates are up 3 points higher than when I was buying investment grade real estate 18 months ago, then that's hammering my cash flow. Now must be a bad time to buy investment grade real estate. I'm like, yeah, except that's offset by a far greater gain. So when you calculate whether real estate makes sense to buy, it all comes down to one number. It's called an ROI, the return on investment. It's what am I making overall? And it's one number that feeds in a lot of other numbers. For example, the property is going to appreciate. Well, the appreciation is going to factor into my ROI. Well, the property is going to cash flow. That's going to factor into my ROI. Well, I'm basically outsourcing the paying off of this house to the tenants. They're going to pay this off. So there's a principal reduction every year. That factors into my ROI. And then, of course, my tax benefits. I get to write off the depreciation. And that affects everyone differently, but that's going to factor into my ROI. Those are 4 factors. And all of those basically come up with a number. Let's just say that ROI, when I buy real estate, can't be lower than 25%. So you say, Kris, interest rates have gone up 3%. Does that mean that your ROI has gone down 3%? Because interest is 3% higher? No. That factors into the payment. That affects the cash flow. My 25% minimum ROI when rates go up 3% maybe drops at most by 0.5%, which means instead of 25%, it's 24.5%. Now, I don't know about you, but if you put some money into the market and you're going to buy real estate and you're either making 25% on your money or 24.5%. What's the difference? It's negligible. It doesn't really matter. So a higher interest rate doesn't impact me for that reason. But the trade-off is I'm getting something else. Inflation, everyone thinks is bad. And the reality is it's not bad. It's bad if your money is in the stock market, a 401k, IRA, or a savings account. It's good if your money's sitting in a collectible or a precious metal or real estate, because tangible physical assets, things you can hold, when inflation goes up, their asset value goes up. Soft assets go down. They're negatively impacted. So the inverse is opposite. So you're right. My overall ROI may have gone down by 0.5% on my ROI because of the higher interest rate. But what has the inflation done? it's probably taken my 25% ROI and put it closer to 40 to 50%. So it's a trade-off. I will feel it every month in the form of less cash flow.
Yes.
But if the overall growth that I'm looking for, if that's my strategy, then I am crushing it. Then I'll take high interest rates. Like, by the way, I love the high interest rates right now. It's doing two things. It's, on the one hand, it's scaring people out of the market. But the other thing it's doing is it's causing people to think, well, now's not the time to buy real estate. Do you know what that does for desperation in the market? When someone really wants to sell, they're going to drop their price and I get a better buy. So investors, they look at this market and they're like, we've been waiting for this.
Counter-cyclical.
Yeah.
Okay, let's talk appreciation a little bit more. You've been buying real estate a long time.
Yeah, 20 years.
If you look at the trajectory of appreciation in homes,
Yep.
as long as it's been tracked, generally it's always going up.
Well, over the last 65 years, it goes up nationwide at an average rate of 4.65%. And most people, when you buy investment grade real estate, you're putting 20% down. So the bank is carrying 80% of the leverage. So if on average, let's just round it for number's sakes, let's just say it's growing at 5% per year. Like maybe nationwide it's 4.6, but I could select a different submarket and it's 5. Well, if I get a 5-to-1 borrowing rate from the bank, then it's not growing at 5% because I'm only putting up a fifth of the money. It's actually growing at 25%.
Because you're leveraged.
Because I'm leveraged.
Kris, in your experience with real estate, have you ever seen properties depreciate?
Of course, yeah. In 2008, you saw $1 million home in the subprime, when all of these thousands of homes were going back to the bank, tens of thousands. Yeah. Because the banks did something they shouldn't have. They uh-oh'd, boo-booed. They basically said anyone with a heartbeat can have a mortgage. If you can fog a mirror, you can have a mortgage. You can state your income. You want to tell me you make $500,000 a year? We'll believe it. We won't verify anything. Verify. And so basically that led to this crisis where we had lent on all this real estate people couldn't afford, and then they got rid of down payments. Like instead of 20% down, it was like 5% down. How about 0% down? How about nothing percent down? So I don't know why banks did this. This has got to be the dumbest thing in our history that banks ever did. This is what led to a crisis of banks. The bank I grew up with, Washington Mutual, that went out of business 2008. Wild things happened, right? This recession is definitely different, but during then, yeah, there was a rapid course correction that happened over it's like overnight, really. $1 million home became a $500,000 home. A $500,000 home became a $300,000 home. $300,000 home became a $220,000 home. $220,000 home became maybe like a $190,000 home. $190,000 home became a $180,000 home. So the closer you got below the median, the more it was a little bit of a bump in the road. Anyone who was buying above the median, they were taking it in the shorts.
So where were you at?
Well, my average purchase price is usually about 30% below the median. So, and by the way, what the median should be. Like right now, the national median's around 400,000. That's not what the median should be. The median should be right around 300. So I'm not buying at 400. I'm buying about 30%, 20% below 300,000, which means my average purchase price is between 220 and 250. And that also means that when the market does go down, which it's not right now, it does mean that when the market goes down, I'm the most insulated. That price range gets touched the least. And, some of my critics that are like, Kris, I bought $1 million house and it's worth $2 million because I got a really good deal on it. You can't do that with a $200,000 house. And I say, you're right, I can't. But what I do is I don't put all of my eggs in a $1 million home. I put them in several single-family entry-level homes. And what they do is they behave the way that I like them to when the market goes up, and they also behave the way that I like when the market goes down.
Okay, so real estate, you're not intimidated at all?
No, it's the opposite. I'm bullish. I'm buying as much real estate as I can. I swore 2008, I bought thousands of homes. I said, when this recession hits again, I've learned my lesson. I'm only going to be blessed with like 3 recessions in the typical working life, right? By the time I'm 65 years old, I'll have probably only had 3 really great recessions. I'm not talking about the mini bull markets where the market changes every 2 or 3 years in miniature ways. I'm talking about the big recessions. You get 3 of those in a working life. I'm on my second one. So I'm taking my shot and I'm buying as much real estate as I possibly can. And I do that, by the way, with a lot of my social media followers. Like they'll follow me and then they'll partner with me and say, hey, I'll put up the money from a 401k or equity from a home. Like Kris, you do all the work.
Right, because most people can't buy in the markets you're buying. You don't buy in Utah.
Well, no, I don't. I only buy in 5 markets out of 324. That's part of my strategy on how I accelerate my ROIs. I'm only interested in buying in the very best markets. So the markets with the most growth, the most population stimulation, migration, where you have the biggest businesses moving in, and yet your affordability is very, very low. Those are the areas that I specialize in because I get the highest ROI. That's kind of like my strategy is a little bit like finding out, man, where's the next San Diego or LA or New York 30 years before it popped. And I go into those markets and I set up camp and I get to be there for the massive appreciation. And that's always happening somewhere in the country.
And that's how you stay 30% below the median, is by buying in the right markets.
Yeah, like I'm not buying homes in LA or New York. Both of those markets lost over 300,000 residents last year. They're on the decline. They've made themselves too unattractive of a market. And half those people went to Texas and a little more than half of those people went to Florida. By the way, I'm buying in those markets.
Yeah.
Yeah.
Okay, let's talk your second favorite game.
Okay.
Maybe it's your first these days. Let's talk business.
Okay.
So they use a number of indicators when they're talking about business. We look at the big corporations, FANG, Facebook, Alphabet, Netflix, Google. And they're saying they're up, and they're saying unemployment is down.
Yeah.
Are you feeling that in business?
No, I think there might be some false reporting on that. We've seen already close to 150,000 jobs lost this year in the tech sector. I think AI is starting to have a huge impact on some of that, by the way. AI is affecting my company in very positive ways. So the market is innovating and it's being disrupted and it's changing. And so in the business climate, I believe we're already in a recession. People keep talking about the impending one that's coming. I'm like, I've been feeling it on my P&Ls and in my marketing for the last 8 months and 9 months, really. And so we've been feeling it, and business owners that I know, they're reporting very, very similarly. And I don't think that people are calling it a recession because they're focusing on, nationwide GDP, which isn't always the best indicator of what's happening at an economic level in an individual business. And they also do that kind of based on the market. I think the real estate market and the stock market are kind of at a standstill right now. There's a lot of people that just don't know what's going to happen,
So in terms of business, what are you doing to pivot with that? And then what do you recommend other startups, people looking to go into business? The up and rising generation, Gen Zers, they have more people want to be entrepreneurs today than ever before.
Entrepreneurship was never popular when I was growing up.
Right.
My dad was an entrepreneur. When I became one, most of my friends were like, what's wrong with you? Half of our nation's GDP does come from the backbone of small business owners, and the entrepreneurs are a very misunderstood class. That's changing drastically. Right now, entrepreneurship is becoming popular because what it means is I think people have had too many letdowns. I think especially in the pandemic when you can't this and you can't this, a lot of people started realizing, wait, how free am I really? And then all of a sudden, I can't work if I want to work, or I'm being sent home and I'm not allowed to work. I think that was highly disruptive to the market. I think they lost a lot of faith in government, the economy, and in their employers. And we have a record number of people interested in entrepreneurship right now. And I think that's a very good thing, by the way. I think entrepreneurship is it's the greatest game that was ever invented. Tough game, hard game, steep learning curve. But once you figure it out and you get on the other side, why would anyone want to ever be trapped with a W-2 salary when you can control your clock, your time, and you get to control the money you make?
So I can answer that. Our generation, Kris, millennials, we were taught our entire lives, why would you trade a W-2 why would you trade entrepreneurship to be trapped in a W-2? And the answer they say is, security, because it's safe, because someone else is responsible for the P&L and I just collect my check.
I don't want to be rude, but this is the most financially irresponsible generation we've ever had. And I'm hoping I hope the next generation turns it around, because you take a look at us compared to the millennials compared to the boomers 2 generations prior, and at the same age, 35, the millennials have 5 times less wealth than the boomers. So unprepared and medically going to live so much longer.
They all went to college.
I know. But that's changing, right?
They all studied business management in college, Kris.
I know. It's bizarre. It's super bizarre. I think people are losing faith in the college system right now, because when everyone has a degree, nobody's special. And the marketplace is starting to realize, it's like, well, can you do your job effectively? Do we really care if you have a piece of paper that everyone else does? They're now looking more for, I think it's more of a results-oriented outlook of like, can you meet the KPI? Can you hit the objective? Can you hit the bullseye? If you can hit the bullseye, should I really care about your background or your education? That's not mainstream yet, but it is moving in that direction. I think college is becoming a less popular notion and option for a lot of this upcoming generation. And I think this is the gig economy. I think that this is the generation that just says side hustles, flexibility. They don't even care if they don't get rich. They just want to have their flexibility, and they're more interested in being in control of how they earn their money so they don't have to place their trust in somebody else.
Okay, so in the last few minutes that we have here, people are going to see this all over the news talking about financial collapse, dire straits, the United States having their credit score dropped by Fitch. What mindset do you have approaching this? What can you share with people that are looking at that and saying, oh my gosh, should I panic?
Yeah, I think that if you're a W-2er, you should. I think that if you're a 401k, you should panic. I think if you're a Dave Ramsey house pair offerer, you should panic because you don't have as ripe of an opportunity in a fixed job situation. If you lean towards entrepreneurship, you can solve these problems. First of all, you have the possibility of solving the problem. That's the win. It doesn't guarantee, it doesn't mean you will, but it means that you could. And that's what's exciting about entrepreneurship. And I'm a huge proponent, whether you're a real estate investor, whether you want to buy businesses or franchises or start a company or buy an existing one. Here's some of the advice that I would give to anyone that is an entrepreneur or considering becoming one. Number one, don't start a business. Buy a business, an existing business, or buy a franchise. You're going to have a way easier go at someone else having made all of the mistakes or a majority of the mistakes. Second piece of advice, I would say be bold. In this economy, when you're at the depth of the recession, fear's at an all-time high and people stand still and do nothing. They're ostriches. Their heads in the ground. They're waving the big, fat, meaty part. Tiger will come around, make its rounds. It's going to take a big bite out of your behind, and you're going to financially get hurt, and you're going to lose time. So entrepreneurship, I think, is honestly, what do you do in such unstable times when you can't really depend on the system? You create your own system.
Dropping like rain and waiting to forever.